think that what the Fed said was incredibly hawkish, and I think any news service that is suggesting otherwise is doing you a disservice. Doing you a disservice. Any CNBC type program telling you that Fed comment was less hawkish is just doing you a disservice. They're trying to placate the market, and they're trying to walk a tightrope of a massive unwind they have to do of their balance sheet to get ahead of inflation. And this is going to get worse, not better. And I'd love for somebody to find a period of time in history where inflation was runaway, and then the Fed did just a couple things, and inflation came back down, and everything was great. I'd love for someone to find me that period in history. What I think you'll find instead is that inflation runs hot, the Fed can't catch up, the Fed has to be ridiculously aggressive to catch up, then the whole thing implodes. And the Fed overshoots. That's what they always do. And Chairman Powell looked right at the screen and honestly told you that that's probably going to happen when he said the tools that we have are blunt instruments. That's what he's trying to tell you. They're blunt instruments. So what he's going to be doing is raising rates and reducing the balance sheet for the foreseeable future, hoping that the inflation numbers get better. And if they don't get better, it's going to have to raise 75 basis points quicker than people think, right? So now we hinge on every piece of economic data. If the inflation numbers come out hotter than expected, all of a sudden there's a 75% chance the Fed's going to raise 75 basis points next month. It was 96% going into the meeting, so it dropped down to 75. You get more inflation numbers that come out, that'll go right back into the 90s. Market will come right back down. So this is not a market where I'm afraid of missing the upside. I'll take my shots and I'll swing trade. This is a swing trading market. If I take my shot right, I get lucky enough to get on a screamer, boy, I'll be booking partial profits at targets, raising stops aggressively. I'm going to be using the 14-day moving average as my stop, not the 25, not the 50. Those are bull market stops. I'm going to use a 14-day. If I catch something that's screaming, great. Let it scream until it, boom, hits 14-day, and then I'm gone. That's what we did in MP and a couple other names, and it captured the majority of our gains. You know, and when I used other moving averages, all it did was give away too much of the gains. I got stopped down anyway, because we're in a swing trading market that ultimately is headed south. So be nimble.